Now it's time to begin our program for today. Welcome to part 2 of the Workforce Wednesday workshop, Your Money, Your Credit. This workshop's focus is to provide students with information to help increase their awareness of finances and credit building. Today's discussion includes the importance of checking and savings account, good and bad credit, valuable resources for tracking credit scores, debt management, ways to utilize services on a college campus for credit counseling, and additional tips to help students make sound financial decisions for college and careers. At this time, I will prepare to introduce our guest speaker. Joining us again for part 2 for Your Money, Your Credit, we have Ms. Sandra Mathis. She is a native of Atlanta, Georgia, where she attended the University of Georgia in Athens. She began her career in financial services, offering life insurance, stocks, and mutual funds before shifting into sales tax shelters in the educator market. Her broad selling career led her to financial education and counseling because it allows her to educate people about finances and not just sell products for our military and churches. So let's all give a warm welcome to our guest speaker today, Ms. Sandra Mathis.
Thank you, everyone. I'm so happy to be with you again. We're going to jump right into it. Jasmine gave me a wonderful intro, and I'm so glad that you asked me to be here with you once more. So let me get my slides up, and we're going to move right into the information for today. I'm going to make sure that you can see my slideshow. So can you see that? Okay, good. So these are some questions that were put, or ideas that were put to me to present to you all, and I put them all here on this PDF. Importance of having a checking versus a savings, credit union versus the bank, ways to utilize services on school campuses for credit counseling, resources for tracking your credit score and helping with debt, and any additional tips to help make good career decisions. We will be watching the chat for questions. All three of us will be, and of course at the end we'll have a Q&A. So now let's begin with the first one, importance of having a checking and savings account. This was an interesting graphic I found. We're not going to focus on all this. I just want you to look at the first one, account purpose. The checking is for everyday purchases, the things that you encounter to keep your bills paid, to get your latte, to pay for your nails, and your savings account is for your short and long-term savings. And just note that there is a difference between your short-term savings and then you have a longer-term savings, like maybe months and years down the line. The checking account typically has unlimited transactions, where the savings account, typically after 4 transactions, you start having to owe something. The checking account, we'll skip the accessibility, but the interest rate, checking accounts tend to have low interest rates, and savings accounts tend to have a higher rate. They still all have low rates, but the checking account has a lower rate, mainly because, and maybe I have another visit and we can go into this, because the bank can't hold on to that money, they can't invest it. So when the longer bank can hold on to money, they invest it and then they give you a higher return. The checking accounts are known for the money going through. If your bank or credit union is a member of the bottom one, FDIC, and I'm going to explain that, or NCUA, you want your money to be protected. And our next slide goes over what that means. Jasmine, can you confirm that you can still see the next slide? Okay, good. FDIC means Federal Deposit Insurance Corporation. And we're not going to spend a lot of time on this, but that's one of the issues we're having with people moving into cryptocurrency and different currencies. When you hear people say the money's not regulated, this is what they mean. If your money in a bank, if the bank fails, and we haven't had that in a while, but banks do fail, there's a legal limit where the FDIC is going to ensure that you get up to $250,000 of your money returned to you. So you do want to look for those things. The other one, let's skip down to the bottom. NCUA means the National Credit Union Association. This was created by Congress in 1970. It's a federal independent agency, and it also ensures your credit money in the credit union, the members, the charters, and it regulates the credit union. So you want to make certain when you go into a bank, you see these so that no matter what happens in the market, your money's protected. The one in the middle SIPC is the Securities Investor Protection. We're not dealing with that today, but I just wanted to put that out there as well. That's more for investing. Today, we're talking about checking and savings. But once again, they can insure up to $500,000 and $250,000 for cash. So just want to be aware of the FDIC, SIPC, NCUA. So now let's come to credit union versus the bank. All right. I'll come to the bottom first. Credit unions are not-for-profit cooperatives. And what not-for-profit means is they're not there to make money. You are a member of the credit union, meaning you have a shared interest with everybody else, as opposed to a bank that is for profit and you're just a customer. Because credit unions are not for profit and you are a part of the credit union, they tend to have higher interest rates. They have better customer service and they're community minded. They do things in the community, not that the bank does it, but the credit union's mission, part of their mission is to see where they can be of service. Like the credit union my mother's a part of, they provide shredding services to the customers once or twice a year. So that's going to be one of the differences. One of the shortcomings is they tend not to have ways to invest. They tend to have to outsource if you wanted to invest your money, whereas banks have places where you can immediately get you a stock, a bond, a mutual fund. Banks because banks are low interest for-profit enterprises, they have lower interest rates. Because it's all about the bank. It's not about you as a member of it. They also have robust networks, meaning if you were regions or wherever you are, you can probably go anywhere in the state and find a regions. You can go anywhere in the Southeast. You can go to Atlanta. You can go to Memphis, and you can find a regions. Credit unions tend not to have that. They have smaller networks. But one of the things I want to share with you is up here at the top, credit unions have something called shared branching. And if you go to, and I've included a link, but you could just Google shared branching for credit unions. When you click on this link, I'm saying it's not a big deal. But when you click on that link, it'll show you all the connecting credit unions all over the US. And so if you go to any of that, you go on the website, put in the zip code where you are. First of all, check that your branch is on that website. And once you confirm that, because they have like 6,000 branches all over the US. And then any branch in that zip code that shows up on that website is where you can go and you can bank with them just like you're at your credit union. They'll do deposits for free, but withdrawals will cost $5, which isn't a big deal. Especially if you're away from home, you need to access money. So that's your credit union versus the bank. Getting back to the banks as well. Banks do provide investing platforms, but they are expensive and the performance tends to be kind of mediocre. All right. So now let's go to the next slide. The next question was resources that are available for tracking your credit score and helping with debt. I'm going to stop share for a minute because I do want to share a screen with you all that would help with some of that, because it is important that we know how to track our debt. So the first screen I'm going to share with you it's a company called PowerPay. And I want you to see, this is PowerPay. This is an extension of Utah State University. You have to log in. So unfortunately, I can't show you exactly how it works. I did find, but what you do is you create an account and you literally put in all your credit cards or whatever it is you're trying to pay off. You put in the interest rate and it will show you exactly how long it would take to pay off. Let me see if one of these can, hold on. I found a little bit.
There is a credit card she's named Store Card. She owes $475 on this card and she pays $10 a month toward it, and the interest is 14.99%. After entering each creditor, click Save Creditor Information. This will save the information to your account. You can always edit the information or delete the creditor if you need to. It also provides a timeline for how long it will take to pay off the debt in its current schedule.
Okay, so that's just a little bit to show you how it works, but you could go on there. Like I said, you don't have to put in your real name if you're worried about that, but it will show you just by all your debt, how long it would take to pay it off, how long maybe do an extra $10 to one debt or to another. So that's just something else I want to share with you. I'm gonna stop share for a moment again and find, yeah, it is a really good tool for stacking, snowball. Exactly, Ms. Hunter. Thank you for sharing that. I'm gonna share another screen with you. This is Annualcreditreport.com. This is the government's way for you to check your credit report. So you go here and you can get all 3 reports from TransUnion, Equifax, and Experian. They do like to play games as far as getting the score. And so I'm going to tell you another way to get the score, but you can get all 3 of the reports for free here. So you log in, and it's really simple. You create an account, and then you just go through each one that you do your TransUnion, you do your Equifax, you do your Experian. Right now, for a lot of you who are still building your credit, there's not going to be a whole lot to see right now. So, don't get it. So, and the reason I'm telling you that, sometimes when I work with my really young soldiers and we pull their credit report, there isn't a report, because you have to have some activity. And so don't get discouraged. Just know that you got to build. But there, oftentimes with my young ones who are younger than like 25, there's not enough information to trigger a report. But this is where you could start right here with Annualcreditreport.com. All right. And let's see, another place you can go. I'm going to share screen once more. Another place you can go is it still here? Oh, here it is. Another place you can go is Experian.com. Let me get that one up. Experian is a credit reporting bureau, and you can go there and you can actually get your report and your score for free. Set up your account, and they allow monitoring. Like right here, they say do more with your FICO score, all free. Get your credit report, your FICO score, your credit card offers. Sometimes these can be, I would prefer if you all sat down with somebody, but sometimes this can be a good way to start building. They'll give credit card offers that can help you start, deciding, putting things like maybe your cell phone bill, put a bill that you pay anyway, put it on that credit card and let that start building your credit. Don't use the credit card for anything else. Just let it pay a bill and then you put it up. All right. So I'm gonna go back to my PowerPoint. Let me see. Hold on. Yeah, here I am. Okay. All right. So here we are. We went over the 3. We actually looked at the websites for check your Experian, your Annualcreditreport.com, as well as PowerPay. So those are all 3 things you can do. And let's see, I'm skipping around a little bit. Any additional tips to help make good financial decisions for college and careers? One is when you do your first job, and I don't care if it's your summer job or whatever. I know a lot of us are taught to get big refunds back at tax time. But I want to tell you now, getting a refund is allowing the government to keep your money and then just give you back all your money with no interest every spring. That's not the smart thing to do. So instead of filing 1 on your W-4 when you get your first job, consider filing, instead of filing 0, because that's what a lot of people do. They do 0 and then they want this big refund. Consider filing 1, claim yourself. You can always claim yourself. When you're filling out your tax withholding on your W-4, your tax refund will be a little smaller, but you will get more of your money each paycheck. And it would make more sense to get more of your money and put away a little, even if it's just $10, put that money away in something that's going to get you 5-10% return at the bank or through your investment. The next thing is strive for a goal. Have a savings. And I don't tell people ages and amounts, but strive to have $10,000 to $20,000, maybe by your 35th birthday or something, or sooner if you can get it at 25. But I'm real big on savings, because when you have a savings, you don't have to rely on credit cards. You don't have to rely on getting loans from banks and payday loans and all these sorts of things. But it's some goal, because a lot of times when I sit with people and I say, how much money would you like to have in savings? And they've never thought about it. And they say, oh, maybe $1,000, not understanding that that's not a lot of money. So I want to plant the seed today with you all. Think bigger, think 10 to 20,000 and go higher than that. And let that be your savings. And then anything you do from that, you can have proper investments, because a lot of us start investments and we end up cleaning it out because we don't have anything in savings when the fuel pump goes out or a pump goes out at the house. I mean, a pipe bursts at the house, then you have to get into the savings. The final one on this one is, if your job does not offer retirement, then it is still your responsibility to prepare. Open a Roth IRA at your banking institution. You can start with as little as 25 or 50 bucks a month. And once you reach retirement age, because you pay the taxes on the Roth now, once you reach retirement age, any and everything in that Roth is yours because you've already paid the government all their taxes. So yeah, so consider doing it or just putting some money away, even if it's not in the Roth, put some monies away. Let's see, the final one I have here is, and we might review some things that I meant to say, ways to utilize services on school campuses for credit counseling. As a matter of fact, I'm going to actually go to this site, so I'm going to stop share again. But Consumer Credit Counseling is a reputable company. Let me get here. Let me share again. Consumer Credit Counseling is a reputable company. First go to your student services, but this is a reputable company. I have the website credit.org, I think it is. But what you would do here is, and they've made some changes, but you would go to, let me see if I can find what they have. Yeah, get started with a credit coach now. And you will put in your zip code, and the way that's the way that you put in your zip code, and they will have someone contact you. Another part of the I wanted to show you was, and this you get started for free with a credit coach. I wanted to come down here and show you the service fees, and you can see that little lady, the little ding, they keep coming at one to ask you questions. Do you need help? Well, for all your credit counseling, the fee is free. The educational materials, free. You do get now, and you all are too young to get into this, but bankruptcy counseling, that's a fee, and that's a new requirement. It's not new more. That's requirement you go, and hopefully we're laying some good seed where that won't be your situation. But your financial education for budgeting and credit counseling, free. Foreclosure prevention. We probably don't have any homeowners quite yet, but you will be soon. But these are the services that are available for you. And let's see, and while I'm here, there was something else I want to go back and show you all while I have my page up. Oh yeah, this is it. I want to show you the co-op page for the credit union. So if you get with a credit union, because one of the things the bank will say is, oh, they don't have as many networks as we do. Like I said, this is the page I was telling you about co-op solutions. You would just go to the shared branch locator, and like you can see, they have listed all the ATMs, 5,600 shared branches. You would just do find a branch. And like I said, you put in your zip code. Yeah, you put in the city, state, and the zip code. And every branch that's available wherever you are is now available to you to work through to work for you for your credit, your branch, wherever it is. So you don't have to be worried about, oh, I don't my branch, they don't have enough branches, I don't know where it is near me. You can look that up. Let's see, I'm going to go back let me stop share one more moment, make sure I showed you all the pages that I wanted you to see from my page, and I think I did. I went over everything. Yes. So then what we'll do now, let me go back to my, I know I'm missing some good questions, and I'll see them at the end. Let me go back to my PowerPoint, my PDF. So we went over the consumer credit counseling, ways that you can, additional things that I think you should be helpful. Oh, yeah, and college and career. Well, it fits both. If you do have student loans, do your best to make certain that you're only taking out what you need, because those monies do accrue. And, and make sure you're using it for what it's for. I know a lot of people, because that's their only source, they take the student loan money and they go buy a car, they go to New Orleans and that sort of thing. Those things have a way of catching up with you, because like I said, all that is accruing. So do your best to only take what you need and use it for what it's for. Don't lend money to people. Please, I see a lot of mistakes with that. Don't lend your student loan money to other people, especially when you don't have a well way of knowing if they're going to pay you back. Resources for tracking, we went over that. Difference between credit unions and the bank, we went over that. And the importance of checking and savings, went over a few things. And I even added some other things that I thought might be of interest to you. So we've covered everything here. So what I'm going to do is I'm going to go on and open it up and stop share screen. And we're going to move into the questions. I'm going to look at the chat and see what oh, this is some good stuff right here. Okay, yeah, I'm just going to read through these. Let's see. Someone took the 6 and the 63. Okay. Oh, good. Oh, so we talked about the tracking, the snowball for power pay. My net pay increased. Yeah, when I trained with lower annual pay, my net increased from 100 to about having 0 tax liability. Yes, it can be really helpful. And right now, a lot of you are not, dealing with retirement, but tax shelters can help you with that as well. So I said about FICO, we'll get into that too. Okay, you can buy you can use it to buy fractional shares, Fidelity, Charles Schwab. You can also do that with Robinhood and Acorn. A lot of the younger people are enjoying that. They have fewer fees, and that's what they're known for, taking that money to buy fractional shares. So yeah, a Hope's credit union on campus for at least 7 years. Yeah, exactly. And that's the types of things credit unions do, provide scholarships and different things for the community. Shared branching, yes, I use shared branching a lot because I travel a lot. So I was glad when I found that out, and because I was wondering how was I going to do all this banking away from home. Okay, what can young people do if their credit is tarnished from accounts they didn't open? Oh, this happens a lot. I help soldiers with we pull those first credit reports, and we find utilities that were placed in their name when they were 8, 9 years old. It's a couple of things you can do. Some people, I've had some that actually went and filed fraud reports. You got to be careful with that, because sometimes that reporting, somebody's going to get in trouble, and depending on who the family member is, that's not always worth it. But that's something to consider. You can say, I didn't do this, because you're right. If you present that you were 9 years old, they know you didn't open the account, and what you want is for them to just remove it. I have seen people to be able to just get it removed without necessarily filing criminal or reports that would compromise someone. But that's the credit is tarnished from accounts they didn't open. You are going to need some proof. Age is going to be a good one. Birth certificates. Like I said, I'm not old enough to do that, but I've also seen people that had to go on and pay it off or negotiate it, because, like I said, these things get tenuous. If it was your mother, how far are you willing to go with this? And then the next thing is, and if it's bringing like a lot of times with my soldiers, if they have a security clearance, they need this off quick. We don't have time to go through the process of who did it and whatever. So they'll negotiate a payment and just get it paid off. So I guess it comes down to what's the situation. Explain FICO. Well, FICO is, that is the new way of, that's not even new way, that's the real way of scoring. And so you have to be careful when you go into like Credit Karma, and some of these other sites, because they're not using the FICO score. The FICO is tied into your insurance, is tied into your ability to purchase a house. The FICO score is the real score. That is your credit score. So when you're looking at sites and they don't give you what the FICO is, then it's not really what your credit score is going to be considered when you're ready to apply for something, or go to the bank, or get a car, or whatever you want to do. So you always want to make certain you're looking at the FICO score. Now, if you're just looking at the report, the FICO score isn't going to be as important. So, but you're definitely right. That's good. You want to know the FICO. And FICO is, even jobs now, when you go on the interview, they are looking at FICO scores now. Whether or not you're getting the job is coming down to your credit score. So these three numbers are really proven to be much more important than we thought they ever could. Mutual funds allow you to buy fractional shares. And yes, exactly. Mutual funds allow you to buy fractional shares in general, but you still want to, under the premise of buy low, sell high. You want to try to get your mutual fund for as cheap as possible, or less expensive as possible. And then you want something that has the ability to rise the price to go up. So you buy in cheap, and then it goes up. Okay. What's considered a bad credit score? Well, the rules changed because before COVID, anything above 750 was good. Now they're putting it in the 800. So basically, anything below 600 is considered bad. Some people would even say 625 or 650, but I can't even get people a credit card when they have less than 600. So we're going to say less than 600 is considered pretty compromised. Like I said, even if you're in a situation where you can't get a credit card or you have one and your credit is just bad, good building credit is about activity. Just don't stop using credit. That's what a lot of people do when they have bad credit. They stop using it. The only thing that salvages bad credit is good credit, good patterns. So you can just put a bottle of water on there each month and pay it off. I mean, $2.50 a month is still activity. That will rebuild your credit. And I've had soldiers and just people in general, I've had helped them rebuild their credit from foreclosures, short sales, divorces, but you got to have some activity. And it can even be your phone bill each month showing up and you paying that off. Okay, what's the difference between a Roth IRA and a traditional IRA? The Roth IRA is after tax, which means that you pay the taxes before the money. Anything that is in the bank has already been taxed. So the money that's coming out of the bank going into the Roth, that's already after tax money. The idea is you paid the taxes on it before it went even went in the Roth. So it grows tax deferred. And then once you reach 59 and a half and the account has been open for 5 years, it's a completely tax-free account to you. So that's the hot button right now. I think it's up to $6,000, might even be $7,000. The numbers, I have so many numbers in my head that you can contribute each year. And you can do that. And then once you turn age 50, you can do an extra $1,000. But that's the hot button. A lot of people are liking because you don't know what laws Congress is going to enact. And if you've already paid the taxes 20, 30 years before, they can't come after you with that. They may raise the age from 59. Okay, thank you so much. 6,000. I thought it was 7,000 is the catch up. So 7,000 makes for the extra 1,000 once you're age 50. So everybody can do $6,000 a year. And then the traditional IRA is used to reduce your taxable income. The traditional IRA is $6,000, just like the Roth, but you pay the taxes on the traditional later. So a lot of people use the traditional to help reduce their taxable income. Like, for example, if they did the whole $6,000 into the traditional, at tax time, that $6,000 wouldn't be included in their taxable income. It's helping reduce their taxes now, but they got to pay taxes on that money later when they start drawing it out at 59 and a half or whenever at retirement. But retirement is never before 59 and a half. Well, I can't say that. There is a provision where you can do early retirement at 55. But for the most part, the IRS has decided at 59 and a half, but you will have to pay taxes on that money as you draw it out. A lot of people who don't have access to retirement through their companies or they have their own businesses use traditional IRAs. Can bad credit be rebuilt to good credit? Oh, yes. Yes, every day, all day. I've worked with people. There was a young man I worked with. He was in the 3s. I had never seen anybody in the 300s before. And within 6 months, but we had to go negotiate some debts and get some stuff paid off. But within 6 months, he was up 100 points. Within 100 points. So it's very possible. And you don't have to go pay an attorney and all these people, all this money. And maybe we can have another session on how to rebuild credit, because I know that's a big issue. And a lot of people throw a lot of money away on that and they don't have to. What is the highest FICO score someone can have? 850. 850 is the highest score now. And a lot of times, and it's easy. I meet more and more. I meet more and more people who have 810 and 820. Your business people tend to have 850. When you see people in 840 and 850, typically they tend to be business people. And the reason is because to get a score that high, you had to have different lines of credit. So not just credit card debt or mortgage debt, but when you have businesses, that allows you to have different types and more types of credit and more credit. They tend to have more available credit because they're a business. And the FICO score, once it gets over maybe 780, definitely when you get into the 800s, You're talking about somebody that's probably got a car loan, a loan installment, a mortgage, they got credit cards. And like I said, the more you have, more available credit and the more types of credit, that's what bumps up that FICO score. But right now, the top score is 850. Let's see, a friend of mine had some big drop-offs a couple years ago when approaching 800. Okay, some big drop-offs. I guess you mean like accounts. Yeah, I mean, that can happen too. And big purchases like a home and sometimes even a car will drop your credit score. Oh, no changes in activity. Had some big drop-offs a couple years ago when approaching 800. Okay, but no changes in activity. Oh, I see what you're saying. I'm following now. No changes in activity. Yeah, and it is interesting, and you're right. And sometimes I've seen some things where you really can't explain why it happened, and unfortunately, there's nowhere to go and to get some more info about what exactly did happen. And even though it looked like there was no changes in activity, sometimes there was. If you have a lot of credit cards, sometimes if you don't use one of them, they will drop the limit, and any change changes all the ratios. And if you pay off a loan, because once you pay off a loan, a loan is a closed-end account. It's not open-end. There's nothing you can do about that. That will drop the credit score, but it only happens initially. It does go back up just through your regular activity of what you're doing. So, but yeah, that does happen occasionally too. Nothing really happened and it just drops. And so when somebody's trying to build, because they want to get a house and they need to hit a certain number, that is very, very, very discouraging. But you're right, that does happen too.
Miss Sonja, I had a question.
Go ahead.
Hi. My question is about charge-offs. Most people don't know what charge-offs are on your credit report. That's when a situation where you don't pay the credit card bill and the company shuts it down, and it can impact your credit score tremendously. So what advice would you give to a person for a charge-off? Should they pay it all off as soon as you can? That's ideal situation. Sometimes they offer a settlement. Which one is the best to do? To go ahead and pay it off or pay the settlement? And once you do that, will your credit score, will it increase tremendously, or will it take it time for that to roll off the credit report?
Excellent question. Thank you, Erica. This is going to come down to how you negotiate it. You want to call first and ask, what are my options? What's available to me? Because I've seen sometimes when they charge it off, they don't want anything. And the reason they don't want anything is because they moved it from a liability to an asset and they've sold it. And that's why they don't want anything, because it's really not their business anymore. If you can get them to tell them who they sold it to, then you call that company and you negotiate a settlement with them, with the idea that, okay, if I give you this money, let's say you owe them $2,000 and they say, we'll take $1,000. Well, what you want to say is, if I give you $1,000, will you take this off my credit report? Let's act like it never happened. I've been able to get that negotiated for a lot of people. And the minute that, because it's like it didn't exist, they get the $1,000, they take it off, credit score goes up. So that's the ideal. Now that doesn't always happen. I mean, that doesn't happen. So the settlement to me is still going to be the better way to go, because at this point, the company you're dealing with got pennies on the dollar. They didn't even pay the full amount that you owe. So that whatever they get, they're happy with. If it stays with the original company, if they'll take it and do a settlement, because like I said, the problem is sometimes they won't take it. And they know that they can ruin your credit report just reporting it. But that's going to be the ideal thing. Pay them, take the settlement, and then see if they'll take it off completely. Now, if they're not going to take it off, because another thing that happens is some of them will take the settlement and still let it sit there the whole time. That's going to be a call on you. If the resources aren't there, I don't know if I would pay them if they're going to let it sit on that credit report. It might be worth just to tough it out and deal with it, because to give them the money and still have to suffer, that's what I'm saying. It comes down, and it is an honor thing, because you do owe them this. So I'm not going to say don't give those folks their money, but you got to look at, okay, what are my resources? What do I need? If this is not going to help me get me where I want to go, that might not be the wisest move for me right now, because you can come back and revisit it. And when it's closer to the time, and maybe pay them if you want to just deal with the whole idea of honor and that sort of thing. But Yeah, no, but that's an excellent question. And another thing I want to say about that is the government has not done anything about the fact that a company can keep selling a debt. Every company gets 7 years to hold it, and then they get to sell it, and then that company gets 7 years to hold it. So that's why you really want to pull that credit report. You can't always run back to AT&T and pay them. You got to go on the credit report and figure out who most recently purchased it. I've seen people pay the wrong person, and you don't get no points for that either. So you got to make sure you're paying for who most recently held the debt. If you can get the new holder of the debt, if you can get the original company to take it back from the holder, because that's what I'm saying, just call and ask, what are my options? Because you won't know what's available to you until you engage them in a conversation. I've seen the original holder of the debt take it back, and then you can negotiate with them. That's going to be the best way to do it. But if you can't, you just want to make sure who has the account and who do you need to talk to.
Thank you.
You're welcome. Let's see, school loans paid off by the government, will that affect your credit? Well, anything that's paid off is going to, that shifts your that's no longer going to be reported, and that's going to shift your ratios, and yeah, that's going to affect the credit score. So yeah, that gets paid off. I mean, the credit bureau doesn't care who paid it. It just gets paid. And that's probably going to go down as a transferred debt, but as long as it gets paid, it shifts the ratios. Thank you for that. We have any other? Did you all get any? Okay, let me see. I'm a user on Amex and just got closed. Oh God. Oh yeah. Let me talk. Thank you for that, AJ. I hope I said your name right. Do not close credit cards. Don't use them. If they're causing you an issue, pay them off and put them up. But when you close a credit card, you lower your available credit. And let me give you an example. If I put all my credit cards together, and my limits come to all the balances put together come to 10,000, and I close a card with a $5,000 limit, I've closed off half of my available limit. I've gone from 10 to 5. That is going to trash your credit score. Another thing about closing credit cards is how old is it? How old is it, and how big is the limit? If I got this card when I was 18 and now I'm 30, that card is 12 years of my credit history. If I close, thank you, Jasmine. That card is 12 years of my credit history. If I close that card, I've trashed my whole credit history. I've worked with a gentleman. He paid off everything and closed all the cards. His credit score dropped 200 points in one day, and all he did was close cards. So he did the right thing initially, paid them off, but put them up. Hide them from yourself. Do not close them, and don't let them close on you. If you get a letter saying you haven't used this card, we're going to close it, literally take that card and go buy a bottle of water. I'm saying $2.50 is all it takes. Buy a bottle of water, wait for the bill to come, pay it off, put that card back up. You won't get another letter from them about 3 or 4 years. But this is how detrimental and treacherous the whole credit thing has become. You can't even close up your own card. I mean, we're gonna have to start fixing where they just bury these cards with us. You just have to keep them forever, then go to glory with them too.
I have a question. So what do you do in a situation where, like you said, the company closes it for you? It's just inactive. Like you had a card for years and years, the account is paid off, and you haven't been in that store about 2 or 3 years, and then you get a notice in the mail due to inactivity, we have closed your account, and then your score goes down. So how can you dispute that with that company? How can it be?
No, because it's theirs. And typically they do. I don't know how all the cards do, but they typically give you you get a letter about 6 months before they're going to close it. Maybe sometimes they don't do that. Once it's closed, you can see it would be worth your while to call customer service and say, would you consider opening this card up? But if it's just for if you put all your limits together, and let's say you got $20,000, I wouldn't care about a $500 limit card. It's all proportional. So 500 out of 20, or even 10,000. Well, 10,000, you're still gonna kind of feel that. But if you don't use that card, you're not going back in that store. I don't think I would care about $500 or less. But like I said, if you only have $1,000 of credit, well, now 500 is half of that. Even if you only have 2,000, that's a quarter of that. That's going to be substantial to your credit score. I would call and see if they would be willing to reopen it.
Okay.
Right. I would just see if they'd be willing to reopen it. Is there ever a time you should file bankruptcy? Oh, I'm sorry. Well, that's a private one. Okay, I'm sorry. I should have read that out loud. I'll just answer that because there may be some more people on that. If your bills have gotten to the place where you cannot function, bankruptcy, that's what bankruptcy is there for. You have chapter 7 and you have chapter 12. Chapter 7 allows you to wipe out all the debt and not worry about, you do have to go through counseling and you can't file again for 7 years. Chapter 12 is what they call the wage earners bankruptcy. You don't have to put everything in. Some people keep the car out, the house out, something like that, but you make payments based on what the bankruptcy judge determines, not what the creditors want. A lot of the creditors aren't happy with what the judge comes up and they want to come back after the bankruptcy is dismissed and get more money. And you want to stay in touch with the bankruptcy court and the whoever you worked with to make sure the creditor doesn't come back and try to get more money because they're not happy with what the judge came up with.
Ms. Mathis, we have one more final question, and we're going to close out the question and answer session. It's been a good question and answer session and session in general. This question comes from the chat. Are the companies that remove financial inquiries good to use to raise your score? The person asks, I know sometimes those inquiries can show back up on the credit report.
They're going to sit on there for 2 years anyway. I don't think I would worry about inquiries unless you got a whole lot of them and you're trying to qualify for something. But typically they're going to sit on there 2 years, and that's why they keep popping back up, because they get a 2-year cycle to report. I think I would be more concerned about things like collections and seeing if I had a late payment, because I feel like if you can catch a late payment in that first 30 days, some like companies like Discover will take it off. I think I would be more concerned about catching a late payment in the first 30 days and maybe getting a collection removed. But the inquiries, because that's a way of them checking to see if you got a lot of inquiries on there, that means you're trying to get credit. And so companies like knowing if you're trying to get this much credit, you either need something or, you're, and so then they can make a decision. Do they consider you credit worthy if you're out there having that many inquiries? Does that mean you're looking for something? So yeah, I hope I answered that. Okay.
Well, that ends our question and answer portion of our Workforce Wednesday. And
Erica, I want to say one more thing.
Okay, yeah, go ahead.
Somebody just sent me about a credit union closing. There's something, each state, when a credit union closes, they're supposed to transfer to a new credit union. But if they can't find everybody, that is a term called escheated. ESCHEAT. It goes escheated to the state. And the state keeps your account. They keep everything in place. My mother lost some money that she set up for me when I was a child, and I went back in my 20s and the state still had it. So you go to the state, you present your social, your name, whatever you need, the state will have that money. So if your bank or your credit union closes and you can't find your money, the state has it. And if the state doesn't have it, then something criminal has gone on and you need to go to the state attorney general. But that's that. Thank you, Erica.
Oh, thank you. Thank you for answering it. And once again, Sonja, we appreciate you for coming back a second time to enlighten us on how we can get excellent stellar credit. Join us next month for our next Workforce Wednesday on October the 19th, 2022 at the same time, 11:30 to 12:30 p.m. And our topic of discussion will be Mississippi's Complete to Compete program. Let me say it again, Complete to Compete program, which is an initiative to help people to get back in school if they've been in school at one time and had to withdraw, to help you get back on track. And then next up, if you missed any of our Workforce Wednesdays, do not worry. We will put the presentations on our website and our social media pages. And usually we'll have that up the following week. So if you missed any information today, don't worry. You have it for your viewing pleasure next week. And then I'm going to give the floor back to Jasmine, and she's going to explain what we're looking for student leaders.
All right, everyone. So For those of you who were able to listen in this morning, we played a snippet of our Student Council podcast. And so that podcast is one of our big projects that we're doing with our Student Council. So right now for this month, we're in our recruitment stage for students. So if you know a student, have a student or a child that you would like to recommend to be a part of our MPB Student Council, they have the information below. You can email the same, me, jasmine.harvey@mpbonline.org. And we're looking for student leaders that continue on the great work that we do with our MPB Student Council. And so I'm looking forward to all of those nominations and recruitment that you may have to send to me. The deadline to register for the Student Council or to apply for the Student Council is this Friday. So if you have any student, you have a child you like to nominate, please send those recommendations and nominations my way. We are looking for students in the grades of 8th through 11th. So like I said, if you know anyone, pass this information on to the schools. And if you want to reach out to me to get more information about it, you can email me at jasmine.harvey@mpbonline.org.
And we have an education newsletter. We will have information about what we have going on in the MPB Education Department each month, and you can sign up with the job form. And Ms. Jasmine should put the link in the chat. Would you do that for me, please? If you would like to sign up, and if you don't sign up here, visit our website at education.mpbonline.org, and you can sign up for the newsletter there as well. And finally, to learn more about our Getting to Work initiative, visit us at education.mpbonline.org. And I strongly encourage you to follow all our social media platforms on Facebook, Twitter, and Instagram at MPB Education. And that's all for us today. We appreciate you all for taking out your time today to join us to learn more about financial literacy. We thank you once again, Ms. Sonja, for that information. I'll probably give you a personal call in the next few months about some things.
Good.
And you all enjoy the rest of your day. Thank you.
Thank you, everyone.